All right, ladies and gentlemen, we're back with our end of day report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger Reports. All right, so we've talked about extreme volatility and massive parabolic moves in markets. And if you recall, I shared with you at that time that these things happen in the direction of the prevailing trend. Okay. But let me explain what I mean by the prevailing trend. All right. So when you're looking at the algo charts, the trend is broken down in two sections. First, you have the bottom here, which is your long term trend. Okay. Then you have your trend momentum readings, which is the green line or the red line. Okay. The green line is a bullish trend momentum reading. A red line is a bearish trend momentum reading. So when I say that the historical moves in the market, going back all to the famous dates that we've had in the past, going back 100 years, you'll notice that these moves happen in the direction of the prevailing trend. What I mean by that is not what you see at the bottom, not the long-term trend. The long-term trend is irrelevant. The historical moves that we've had, every single last one of them, came in the direction of the trend momentum reading. So on this chart, this is silver. Silver right now has a bullish trend momentum reading. If we were to get a parabolic move, the parabolic move would be higher, not lower. Doesn't mean you can't get a big move down, but like I'm talking about the historical movements of the past. They always happen in the direction of the trend momentum reading. The trend momentum reading um, is a measurement of the long-term trend and what's happening in the market. So if you go back here, you'll see that you were still in a bull market, but the trend momentum reading was bearish, meaning that the long-term trend is still in a bull market setting, but you're in a correction. Sell the rally mode. All right. The market is no longer a buy. It's a sell the rally mode. Anyone that was buying doing a bearish trend momentum reading is only asking for trouble, because you would have got destroyed as the market dropped several dollars on you. That's a lot of money. The time to buy is during a bullish trend momentum reading. The time to sell is during a bearish trend momentum reading. And in very powerful long-term sustained markets, you'll have, times where the market will be under accumulation, hence the green, and under distribution, hence the red. And when the red hits, that's when you take your profit and or short or stand on the sidelines until the market goes green again. All right. That's how you do the long only strategy. All right. Because a lot of you trade equities and you're not comfortable with shorting or don't want to short. You just want to know when to buy. And you buy when you have a green trend momentum reading. You sell when you have a red trend momentum reading. It's just that simple. And these are actually on the daily reports. Did you know that? They are on the reports that you get every day. And what marks the bullish and bearish trend momentum readings on the report is followed by the um, the alerts that we have on the reports. Okay, so when you look at it, you'll know if the trend momentum reading is bullish or bearish. It's just that simple. Okay, very, very simple. So just always remember that. If you want to know the 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 positive momentum reading on the report will be filled out with a number. And if it's a negative trend momentum reading, meaning the red one here, it will show on the report as a negative. It's just that simple. That's how you know where you're in the cycle. All right. So just FYI, because I get questions about that sometimes about how does this match up on the reports, and so that's one of the things that we've added to the reports. So looking at silver here, you're still in a bull market. You still have a bullish trend momentum reading, so it's still a buy the dips mentality. But we ran into some trouble here. We have a crash alert, but it's wrapped up in a neutralization bar. So what that generally means is we have an alert, but it's not going to really come into fruition until we get out of the neutralization process. So if you look at the last neutralization process back here, the week of January the 4th, we had a crash alert, but we also had a neutralization process underway. So the market did give you initial downside production, but then it flipped, as it always does in this neutralization process, and went green on you. And then you even got a positive bot check letting you know that an upward move was coming. And sure enough, we got it, right? But then something happened. On the week of January the 17th, the neutralization bar dropped off and just left the red standing alone. And then we also flipped from a green to a red, meaning from a bullish trend momentum reading to a bearish trend momentum reading. And so that's when it was letting you know, okay, it's done now. Excuse me. No, we have not. We've only talked about silver. We haven't got there yet. Just breaking down some tricks and tips on reading the reports. So I think you'll find that very, very powerful. So at the end of the video, go ahead and rewind it from the beginning. In the first 7 minutes is where I'm going over these things. But the S&P and the NASDAQ are coming up. All right, so back to the silver here. Until we get out of this neutralization process, I don't think the crash alert is going to happen just yet. Just like back here, it didn't. It waited. All right, it let you know what was coming, but you had to pause because of the neutralization bar. A neutralization process is where the market literally moves sideways, doesn't do anything. It's different than a consolidation or a congestion. A neutralization is a process in which the market is not going to be allowed. It's a difference. Be allowed to move. It's almost like perfect equilibrium, which is almost never exists in the markets, right? But in these situations, something's going on. It's letting you know something is going on. All right. So in general, it's a general thumb for the majority of people, it's a good idea to avoid the neutralization zone. Once we get to a neutralization zone, it's better to wait until we come out of neutralization before placing your trades. All right. One thing you'll note on that is that it's just better to not do anything. Now, how do you know on the daily reports if we're in a neutralization zone or not? It's simple, because under the trend column, it's going to give you a 0. It's going to be zeroed out. During a neutralization process, the market is no longer trending. All right, so you're going to be zeroed out. You will have a 0 there. It will tell you 0 because that's what's happening. And under the positive and negative trend momentum readings, it will be zeroed out. So the long-term trend will be zeroed out, and the trend momentum readings will be zeroed out. That's how you know you're in a neutralized market. All right. And it's best to wait until you come off neutralization. All right. So just FYI, when you're looking at the reports and trying to match some of the information from the algo charts, which is totally separate from the reports. But I do take the indicators from the reports, from the algo charts, and put them on the reports, just so you know that. All right, let's move to our next one. So that's silver. All right, next up we have natural gas, the widowmaker's market. And traditionally, historically, nat gas used to be extremely volatile, and it would have some enormous moves. That's why they call it the widowmaker. it would just devastate you. Like going back here, look at these, look at the wideness of the two longer term support areas, way up here and way down here. All right, it lets you know that the nat gas can get busy. But another good thing about nat gas futures is that it can trend for a very long time in one direction without even taking a breath. Like you see right here, this is a long situation where you got the crash alert, and then it gave you an extra day to get prepare, and then the market started falling, just down like pretty much every day down. All right, so now it's trying to decide what it wants to be when it grows up right now, and we'll see what happens because we're coming into this. Summer will be here before you know it. We're in the spring now, and so the demand is just not there. But eventually, the sleeping giant will awake. Something will happen, and this thing will explode. And when that happens, you know what it is. All right. So, FYI, but you do got a green bullish trend momentum rating, which means this market is trying to get a bear market rally going, like it did back here. Had a little teeny one back here. Had one back here. Had another one back here. Hasn't really been lasting, but the market's trying. Um, yeah, let me let me see what we got. You wanna see the VIX? Let me see what we got. Let's take a look here. Let me get out of this because we're done with this one. Let's pull it up. All right, so UVIX, the UVIX, the 2x long UVIX futures ETF. All right. All right. So we'll get this pulled up. Okay, so this is all over the place. This this one is all over the place. It's in a trading range between $15 and about, we'll say, $30. So it's a $15 trading range that you're in right now, and you can see this is a consolidated market. Notice all the various colors. It goes from green to yellow to blue to red. I mean, it's just every day going back and forth. So this one's not doing anything. It's just all over the place. Now, if you're using the VIX futures as a traditional VIX kind of play thing, well, when the VIX is low like this, that's normally when what people are saying that people don't care. They're not looking at anything bearish in the market. They're more bullish, I guess. It's like a inverse indicator. And when it's high way up here, there's mad fear in the market, so people are selling everything. So you see, it's been quiet for a while. It's just going down, 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 down. Then it got quiet. Then all of a sudden, you start getting all this volatility here. That would suggest that the market is starting to worry or become concerned about some things. If you were using it as a traditional VIX, but I can see this thing was all the way up at $130 some, so it's not acting like that. Um, I don't know. I don't know. It's I don't know what this is. This is untradeable. It's a mess. I don't know what you would do with that. But you are in a bear market, if that means anything. You're in a bear market, so there's nothing to buy. You're not trending. All right, and then the next one was let me see. I'm gonna give you one more. This is one I always remember. Is it still a thing? Let's see. Yep, the VXX. Let's see what's up with the VXX. See if you get a better picture with this one. All right. Nope. It's pretty much identical. I don't know what you do with that. Not sure. But I think what you really want to look at is this right here. I think this is what you're really asking for. And that's the UVXY. I think that's what you really want to know. All right. So here's your UVXY is in a bear market. Now that's interesting because a lot of the US stock indices are in bear markets. And this is in a bear market. And look at the pattern. This chart of the UVXY is the exact same chart as the other VIXs. Interesting, isn't it? You know, very interesting. It's the identical chart, so there's no dislocation or anything like that going on in the VIX universe. So yeah, interesting. I have a theory about that. My theory is that they're going to keep people, you know, in a state of complacency, saying there's really nothing to fear but fear itself. So here's where I'm at. I think right now the edge is going to the bears. I think the markets are about to crash and burn hard. But if they're able to pull a rabbit out of their hat and do something or say something that gives hope to the people, well, then the farthest they'll be able to kick this can down the road is the fall. I think if the market does not roll over now, then what will happen is an explosive bear market rally, explosive rally will come. The market will even take out the old highs and make people think, oh, yeah, the bull is back. And then when the fall comes, like I'm going to say the end of August, by the end of August, that's when the markets will top out. But then this time they're going to fall from whatever height they are and come down and take out the 52-week lows. So either we take out the 52-week lows now before summer, before the end of summer, or we do it at the end of summer, the end of August. But that's all the time we got. We don't have any more time than that. With all the stuff that's going on, the market is coming here inevitably. It's coming to take these 52-week lows out inevitably. All right. But that's what they're trying to do, because this is an engineered collapse, but things are moving to the point of being out of their control, and they want to have some kind of control over the market. So they want us, they're not ready for it to just fall apart just yet. They need a little bit more time. So now that you know the banking crisis is here, it stuck its ugly head up, you know, they want to put the zombie back in the body bag. They don't want the zombie to come alive yet. So they zipped it back up in the body bag, and they want to wait, put it back until they're ready for it to come out. But eventually it's going to come out. So just know this: the longer they hold it back, the more powerful it's going to be, the worse it's going to be. It's like the back in the day when we were kids, you could take a bottle of soda, like Coke, Pepsi, whatever, and if you put these tablets, and I think antacid tablets or Alka-Seltzer tablets, I forget what it was, and you shake the bottle up real good, and screw the cap back on, real tight. You shake it real good, and run. The bottle would explode like a bomb, and that's what's happening now. The Federal Reserve has stuck Alka-Seltzer tablets in the bottle of Coke. Okay, and this is back when it was a bottle, not cans, but bottles of Coke. But except for the Fed did something different. This time, for the past 20 plus years, the Federal Reserve put a whole box of Alka-Seltzer tablets in the bottle of Coke. Not just one or two tablets, but the whole pack. And then they shook it up real good and ran and ducked. And now they're just waiting for the explosion. And I'm here to tell you there's nothing they can do. It really isn't. It's going to happen. And it's going to go pop. But it's not gonna be a little pop like, like blowing a bubble when you're chewing some Hubba Bubba bubble gum from back in the day, or the Big League Chew from back in the day, and you blow the bubbles and they make a little pop. Nah, this ain't that kind of pop. This is a nuclear bomb explosion. All right, that kind of pop, the kind of pop that can blow out your eardrums. Okay, this is that burst. All right, this is one of those things where if it, when it does fall down and come down, it's not getting back up. it's going to flatline at the bottom and surf at the bottom for a long time. That's what we're talking about. That's what's about to happen. All right. Before I go on, let me just tell you real quick. I had a dream about a week ago, maybe a little bit less, a few days ago. And in this dream, I was out with the family somewhere. We were out of the house. And all of a sudden, I seen people running around, and it's like we were in this office or something. And they were like, "Oh my goodness, did you see? Did you hear? Turn the news on. Turn the news on." And the Dow had dropped 20 or 30,000 points. No, I did not misspeak. I did not say 2 or 3,000 points. I said the Dow had dropped 20 or 30,000 points in a day, instantly. All right. That's what I saw. And I was like, oh my goodness. But I'm like, I'm not at my I'm not home. I'm not at my desk. I'm not at my trade terminal. And then it hit me and was like, then I remember saying to myself, even if you were, there's nothing you can do. The move has already happened. Either you were short and and was in the market before that happened, or you missed it. You missed the trade of the century. So that's what I saw. And I even saw the chart, how the market had just absolutely collapsed. And then it started like flatlining at the bottom. You know how you look at a chart, like a 5-minute chart or a 1-minute chart, and once the chart moves from the left to the far right side of the screen, but this one was like almost flat, like a patient on life support, and they may crash code blue, and the line, instead of going up and down, in big waves, it's little teeny waves. That's what I saw in my dream. And when it woke me out. When I woke up out of my sleep, I couldn't go back to sleep. And I told my wife that. Now, you want to know something eerie? In the past, when I would have dreams and stuff like that, most of the time it would happen so fast that I didn't have a chance to react or do anything about it. Real talk. So this time I said, I ain't missing this one. This is the trade of the century right here. I'm going to be ready for this one. So that's why I started the video off saying, remember what I taught you guys from before. If you look at all the historical moves of the market going back 100 years, you'll notice the pattern is that every single one of those devastating circumstances happen in the direction of the trend momentum reading, not the long-term trend, but the trend momentum reading. All the historical crashes of the past happen under the auspices of a bearish trend momentum reading, regardless of the long-term trend. I don't care which date you want to pick. I've even done a video about it. I've even showed you the histories. 1929, same thing. 1987, same thing. The year 2000, same thing. 2001, same thing. 2010, same thing. 2008, same thing. History repeats itself. The biggest crashes happen under a red star, under a blood red moon. This red line is your blood red moon, your blood moon. And all of those crashes happen under this. That's why this is dangerous. All right, especially in a bull market like the Dow is in right now, long-term bull market. But it's been under this bearish trend momentum reading for way long. And since we're now focusing on this chart, I'm the bearer of bad news, so let me go ahead and just give it to you. I regret to inform you with a heavy heart that as of right now, today's market gave us a negative bot check. I'm so sorry to have to be the one to tell you that. We got a bot check, folks. What happens when you get a negative bot check? Now, for those that are looking at the reports and following along with the video, bot checks on your report are indicated under your momentum readings as a 411. If it's red, it'll be a minus 411. If it's green, it'll be a positive 411. All right. Those are your bot checks on the reports. The Dow gave us a bot check today. At some point over the next few trading sessions, you can expect a down move is coming, ladies and gentlemen. Look at the bot checks of the past. Back here, you had one. The market waited till it went up, then came down, and it said, nope, this was not the move. Gave you another bot check. Then gave you another, said, look, man, I'm warning you. Then gave you another one right here. Then said, okay, you guys ain't listening. I'm telling you, this big down move is coming. And what happened? Whoosh. All right. I'm just saying, always pay attention when you get an alert, whether it be a crash alert or a rally alert. Know that a move is coming. Bot check back here, positive bot check in a neutralization zone, but it'll let you know a big updrift is coming, and it did. Boom on that. This is that CPI day. CPI data. Boom. 800-point rally in the Dow. And then the next day, you got a crash alert saying, okay, that move is done. Boom. The market came right back down. All right. So these markets are telling you something. They're trying to tell you something. Here's the NASDAQ 100. Now, the NASDAQ 100 has crossed over from the bear market to a bull market, which means that the bear market rally has been so long and deep that it was enough to change the perspective and the complexion of the market. We are now in a bull market condition. But just like the Dow, once the market is crossed over to the bull market, you immediately got a bearish trend momentum reading. And you came into it with a crash alert today, and you got downside production, and we got another crash alert for tomorrow. This NASDAQ chart is going to start looking like that Dow chart. I'm telling you, something nasty cometh. Gold. Gold is in a bull market complexion, right? Now we got a crash alert, and the market went down. And then it kind of bounced technically today, but you got a bearish trend momentum reading. That's usually not good. Now, if the gold market is if this is really a bull, if this bull is really saying I'm established and I'm long term, then this bearish trend momentum reading shouldn't damage the chart too technically. Okay, it should be a minor correction, whatever. But this bearish trend momentum reading is scary. For those of you who have studied gold, you know that historically speaking, gold can have $100 days. I've never seen a $100 rally in a day in gold, but I sure enough have seen a few $100 crashes in a day in gold. Be careful. Bearish trend momentum reading in gold, folks. Next up, S&P 500. It's still locked in its bear market. It's not even trying to do a bear market rally. It's not even trying to put in a bottom or a support point. Right now, the S&P has no support. The support is way down here at the 52-week lows. All right. And you got a crash alert for tonight into tomorrow's trading. The stock indices are giving you crash alert after crash alert after crash alert. Crude oil has now a bull trend momentum rating and has had it for several days. This rally is underway, but it's getting close to the $75 to $80 range I told you about, which is the upside initial target, and it's also where massive resistance lives. All right, this is what's up. Let me see what you say there, Tom. Glad I caught the live because YouTube hasn't given me notifications on your channel since the pandemic, and I have the bell turned on. Wow. Yeah, I've been noticing that too on some of the channels I subscribe to. Yeah, man, I've noticed that. And it doesn't matter if you're talking about markets or economy or news. I have subscriptions for just about everything. Sometimes I just want to, not have to think about nothing. So I'll listen to celebrity gossip and Hollywood news, and I got, and sometimes I don't get subscriptions on some of that stuff. I don't get notifications. So yeah, it's weird what YouTube's been doing with their algorithm, man. So here is the crude oil. You can see, like I said, 85, the 75 to $80 range is going to be very key for this market. It may not be able to make it. We'll see. But don't try to go chase it. You know what I mean? Just follow reports and do what you got to do. Next up is the Russell My Hustle, and it is flip-flopping like a fish out of water. So you're in that longer-term bear market. The bear market rally was far and deep enough to change the complexion of the market from a bear market to a bull market. But because of that bearish trend momentum reading, it changed the complexion of the market back into a bear market. That's why I told you the bearish trend momentum reading is dangerous. It doesn't matter what the trend is, if it's a bear market or a bull market. You got a bearish trend momentum reading, and the selling pressure and forces will take over. That's what I'm saying. Now, look, bear market, bearish trend momentum reading, right? Now, here's something that's very interesting to happen. We got a neutralization bar down here at a support. Then it dropped off. You got a rally alert. And you didn't get any upside production today, but you got another rally alert for tonight into tomorrow's trading. Bottom of the Kumo cloud at 1850 is the upside initial target. And you got a green momentum. You got a bullish trend momentum reading. So now this market has flipped from a bearish bias to a bullish one. All right. So the Russell is breaking away from the other indices right now. This is an interesting turn of events where the indices that usually move together are not doing that. They're acting crazy. Okay, this is the dollar index. Let me fix that real quick. Give me a second. I don't know what's going on with the US dollar index. I noticed that earlier, but I couldn't figure out what the issue was. So just bear with me for a second. We're going to fix that. I think I know what happened. Let me just see if I'm right. Yep. Okay. I see it. I see it. Hold on. Give me a second. Give me a second. Okay. I see it. All right. I have corrected that. That was a keying error on my end. So that is fixed now. Let me go ahead and fix that. All right, here we go. All right, so here's your US dollar index. You're still in a long-term bear market, but you got a bullish trend momentum reading. So just like with the bearish trend momentum reading, the bullish trend momentum reading is telling you that you're still in a buy the dips, even though the market has come off from this point to this point. It's still hanging in there, and you got a deep support at the 101 level. You got a major support there. It's looking like the market is trying to come there and test it, but even with that, you can't sell it because you can't short it because you've got a bullish trend momentum reading, and this thing could power up on you at any moment like it did here, the week of March the 7th, or like it did here on the week of February the 5th. So you got to trade in the direction the market's telling you to. and you just got to wait for the trade to develop. If it doesn't, then oh well. But you don't force anything. All right, here's the Ethereum futures. Now, this chart is consolidating and messy as well. So you're in a bear market, and up here at these levels, the market has been really struggling. And now you flipped from a bullish trend momentum reading to a bearish one, and it looks like this market is about to be under some selling pressure now. So Ethereum is just struggling, doesn't know what it wants to do, but I got to go with the trend momentum readings, and that's what it's saying. It's saying that we're looking at some downward pressure coming in Ethereum. Bitcoin is looking kind of the same. We got a bearish trend momentum reading now in the Bitcoin as well. And let me see here. Yep. It's like the market's going to come back down here to the 23,000 support, which is the top of the Kumo cloud in the Bitcoin. So big sell-off potential coming in your Bitcoin. I know it's a lot of stuff happening in these charts. You know, even when the news is quiet, a lot can be happening in the charts, and you just have to take note of it. You can't ignore it. It's powerful. Okay, so with that saying, I'm all talked out. Y'all know what it is. The system works if you work the system, and you got to make money and not excuses. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Smash that like button and be patient. All right, let the trades develop. If you get triggered in a trade and you're watching a drawdown, you're experiencing a drawdown because the market's just flip flopping all over the place. It's really not doing anything yet, but you're triggered long or short. Stay with it. Let the system get you in and out of the market. You got two choices. You can pop your way through it with the pop method. All right. But I'll let you know this piece of advice. The pop method works best when the markets are trending. All right. Which means that means the long-term trend is bullish and the trend momentum reading is also bullish. That's when the pop method works the best. When the markets are mixed like this, when you're in a bull market with a bearish trend momentum reading, it's better to let the report take you out, and vice versa. Okay, just FYI. All right, so you guys may want to bookmark this this particular end of day report and use it for reference, because I dropped a lot of jewels in here. All right, you may even want to download it. Do what you got to do. All right, and if you have any further questions, just hit me in the trading room, and I will, the live chat room, and I'll get at you. All right, folks, have at it. And the reports are out. If you go to pulsewavetrading.com, log into your dashboard, you will see tonight's reports. And I'm about to go and put tickets in myself. So happy trading to you. See you in the next one.